Well, welcome to the Trade-Off Christmas and New Year special. Blake and I today talk about the big themes that have happened throughout 2025, some of the surprise moves that we're seeing, and we look ahead into 2026, into what could be a more tumultuous year, something that hasn't really happened this year with the exception of what we saw in April. And we look at some of the big thematics, some of the market debates, and potentially some of the markets that we think should be on your radar. But before I do, I want to say a big thank you to everyone who's been watching the trade-off this year, the loyal followers. People have been offering huge amounts of comments and interactions for this year. Blake and I have thoroughly enjoyed hearing your articulations and markets, where you're seeing directional skew as well. So a big thank you from myself, from the team at Pepperstone, and we'll be back after Christmas, after a bit of a break. Hopefully, we can't give you a date at this moment, but we're looking at to reinvigorate the show, and any thoughts that you guys might have out there about how we could do things better, what you'd like to see, the asset classes, whether it's a bit more punchy, we'd love to hear those as well. So from the bottom of my heart, thank you for all your interactions this year. Blake, coming to the show, my good sir, would you please, have you got anything to add on to that point?
No, not really, Chris. I just wanted to, from the bottom of my heart as well, thank you to all of our viewers. The last 3+ years that we've been doing this, and however many shows that we've done, thank you all for coming in and, subscribing to the channel, jumping in the comments, liking the videos. We really appreciate it. You're what makes this show. So thank you so much for being part of what we do.
I'd love to get a before and after shot of how we looked on the first show relative to this one. I'd imagine there'd be a few more grey hairs and a few more wrinkles going forward. But before we do, let's go into the first section. I want to go into the recap of 2025. Some of the movers and shakers. And whilst we don't really gain huge amounts from looking backwards, we try and live in the future and as market participants. There are things that we can gain, that we can bring forward. So I think it's good to touch base on those.
Well, I think one of the big ones, Chris, was we talked about this at the beginning of the year or the end of last year, how U.S. equities were going to underperform global equities. Ironically, U.S. equities, I mean, if you look at the S&P, we're up what, maybe 15, 16% right now on the year. But if you look at other markets, they're even higher, aren't they, Chris?
Well, you've got the IBEX has been the big one. How many people had that in at the beginning of their radar? The Spanish IBEX up 48% year to date. Spain seems to have got their fiscal issues firmly under control. The Nikkei's up 24%. The Hang Seng's up 20, similar sort of situation there. So Europe's done really well, and I think if you're a US based investor and you're hedging it back to you're not hedging that exposure, you're leaving it in the currency. Given the weakness we've seen in the US dollar this year, the US dollar in itself is a story, because the Dixie had its worst first half year that we've seen on record. It fell 10%. In the last 6 months, it sort of traded a range of 100 to 150 to 96.50. But if you hadn't, if you left it in euros or in yen terms or whatever, you've effectively had a much better return from that currency exposure as well. So certainly, you look at the S&P, it's had a good year, but that exceptionalism story hasn't been there this year. And you can go obviously at an index level. It's a basket of stocks. Within that, you've had some big moves. Of course, in the S&P, the AI trades work really well this year again. There's a lot of conjecture, and we talk about 2026 because it's we're starting to see the wheels fall off a little bit now. The buy the dip isn't there, but AI winners have done well. Certainly, the power generation companies on the utility side have absolutely flown. It's a big investment theme that I don't think is a bubble at all. I think that's still well to be looked at. But they've done well, and even like the retail trader favourites have done well. And then I guess, Blake, you can't really go past silver. It's up 130% year to date, all-time highs. We've got gold now up 65%. It looks like it wants to break new autumn here. Platinum's over 100%. So that's really been the big story of the year, right?
It has been. And gold, I had gold on my bingo card, not so much silver. But when you're looking at charts that date back to going back into the 1960s, 1970s, and you see that silver just kept hitting $50 and couldn't break it. Who would have thought silver would have been up as much as it is? I mean, we all looked at gold and gold made sense, but the move in silver has been something dramatic.
I think you can talk about the reasons why. I think one of the differences between silver and gold, obviously, there's a liquidity argument there as well.
Sure.
And so much of this has been driven by investment. A lot of these physical backed ETPs, ETFs, have created huge. I've seen massive inflows this year, record inflows, which has then bought physical markets. But the silver market is still subject to Trump's critical mineral tariff, which we may hear something around sort of decision in May. And that's, again, is boosting silver on a relative basis compared to a lot of the other places as well. So that's giving it big tailwinds. Gold's obviously getting a lot of love from the central banks. The Chinese themselves have been increasing gold as part of their reserves for 13 straight months. And then obviously you've seen the speculative crowd look to run max long positions in futures as well. So that's obviously a big one. Your neck of the woods, though, obviously, you're going to FX markets. If I'd said to you at the beginning of the year that the Swedish krona was going to be up 19%, the Swiss francs had a good rally. Obviously, it's been a dollar sell-off. We could talk about that going into the India. But also that carry structure. LATAM FX has done very, very well. Brazilian reals up, 28% year to date on a total return basis. We saw a very strong gain last year in LATAM FX in the high carry currencies, but this year's been another one. That low volatility we've seen in FX markets, the JP Morgan FX basket volatility index has averaged 8% this year, pretty low. The VIX, or if you look at S&P 20-day volatility, realised volatility, with the exception of that 2-week window around sort of Liberation Day, has averaged a very, very low level of realised volatility, and that's been very strong for carry positions. So, that's been a strong macro position. Brazilian real, Mexican peso, the Hungarian foreign has just absolutely killed it. Up nearly 30% this year.
I know, and the South African rand continues to make inroads. And Chris, the dollar being down literally almost 10% on the year, and we're still trading around this 14-year trend line. I believe that's going to be a story going into 2026. So maybe we should start talking about what we're expecting going into this next year.
Yeah, let's look at the big themes that I'm looking at, Blake, right? So obviously we can't look at market moves right now, but obviously we've got a new Fed chair that will be coming in and probably get told about that in January. The questions I'm asking there is, will the markets go after response? Will he gain the respect of the markets? Will there be potentially a change of communication within the Fed? You go to someone like a Greenspan who really didn't want anyone else from the Fed board to speak at all on markets, and then that changed under Bernanke and Yellen, where everyone was given a change. So and then obviously there's an independence argument. With Lisa Cook, Supreme Court coming up on the 21st of January. How close will that person be? You've got the IEEPA tariff ruling, which was supposed to be maybe December, maybe January. It could be even further. What if the Supreme Court rules those illegal? Will there be any market response? It's going to get a very messy process as people look to claim back. Trump's already said that there's going to be a change of. They'll immediately get onto new sections to make up that tariff loss. But will there be any situation? I've also got central bank divergence as a potential thematic next year, Blake. You've got. Markets expecting rate hikes from the RBA, the RBNZ, the Bank of Canada, the Bank of Japan again, but at the same time, the market's saying, well, the Fed are going to cut another 50 basis points. Is that too high or too low? The Bank of England cutting rates. You've got that central bank divergence, and that generally leads to higher volatility in the FX markets. And then you've got fiscal divergence as well. You've got the UK who are probably the outlier in cutting out, but you've still got fiscal policy responses. Will that impact? The AI trade is now front and centre. The funding markets next year, we've already seen a response in Oracle as Blue Owl have pulled funding for their $10 billion Michigan project. So there's going to be a huge funding task, 300 billion or so of investment grade issuance coming through, competing with government finances. And I think that's going to be a big one. So I'd certainly think, will the AI trade continue to flourish? What happens in the corporate bond markets? What happens to the CDS as people look out? And obviously you've got inflation, growth and all those factors as well. So there's some of the big factors that I'm looking at. What are you looking at, mate?
You hit the nail on the head about the Fed chair who's going to be put to the test by the markets. Think about what happened this year. The Fed lowered rates by 3/4 of a basis point, 75 basis points. And what did the 10-year do? The 10-year stayed stable, if not went higher. So think about next year as the Fed wants to continue to cut rates. Does that actually help? Does that really help the common man, if you will, in the United States? Does it really impact the dollar? Are we going to have a Mar-a-Lago Accord? The Trump administration continues to want to have a weaker dollar. So there's a lot surrounding the dollar, but also, Chris, we can't undermine the underperformance of Bitcoin and cryptocurrencies. Risk appetite. Look, stocks are just off their all-time highs, very close to all-time highs. Bitcoin is trading heavy and Ethereum is trading heavy. What happens to crypto this year? My fear is yeah, we're going to see Bitcoin test that 75,000, but what happens below that level? And I think that becomes kind of dangerous for the markets. But what's also kind of, I want to say kind of sexy, is you look at silver. I've had this, I have conversations with some of my colleagues that we're fearful we're not going to see silver back below 50 now that it's broken out. And so,
yeah.
I mean, it's going to be a big level, right? But those are going to be trading things.
Silver, as I say, is the critical minerals. But, with gold and those various factors, you've got to ask yourself, are central banks going to pull back from increasing their purchases? I don't think that's going to be the case. It may slow a bit, but it's certainly not going to be the case. In fact, you're seeing it all really started with the US freezing Russia's assets and a lot of these. But now you're seeing that the Europeans might do something similar to Russia as well. And, that just incentivizes some of these players who are not friendly with the Europeans or the US to increase gold and precious metals percentage of their reserves. I think that's a big one. But then also the investment side has been the big driver, right? You've seen massive inflows into the gold and silver ETFs and ETPs, which have gone into the market. Are they going to dry up? I don't think though. Gold is probably still 3-4% of investment managers' portfolios. Still more to go there, but I think there's a lot that still needs to go right. But for me,
and what about palladium and what about platinum? I mean, those are the underloved that could play a little bit of catch up. Chris, 2026 is going to be an explosive year, not only for assets but for volatility, and that's what makes trading great.
I hope so.
And that's why we're so happy that you, the viewer, are here with us on the Trade Off Show, because we're here to keep you abreast of what's happening with what's volatility, what's moving.
Absolutely. Movement is what we're all about. Now, just one, for me, the markets, we talk about the Fed and the macro situation, and the Fed is still data dependent. I think, Chris Waller's comments that, the neutral rate's still 50 basis points lower than where we are is very much music to the market's ears. They want to see probably Chris Waller come in as the Fed chair. Hassett's still the favourite there. But I still think, for me, we've got to be looking at the AI trade. That's where I'm looking at from an equity perspective, because that's really driven so much of the move. There's crowding in there. Oracle is the front and centre now. They don't have the cash flow, the free cash flow that the Amazons, the Googles, these guys do. They're going to go to the funding markets this year. The lease cost that they're doing on the development is significant. And also SoftBank as well. They're so leveraged to OpenAI. They've got a $40 billion funding payment to due this month. And it's really down to OpenAI. I don't think they're going to list anytime soon. They don't want the markets to pry over their position. They need so much more funding. And the big point I really need to make here is, what happens, Blake, if Google go out and say, look, Gemini 3.5, we're going to make this free for 2 years. The whole OpenAI model is about monetizing at some stage their $800 million followers and subscribers and customers, right? They need to monetize it. You can't just keep funding it forever as they go for this massive expansion and build out. If Google come out and say we're going to give this free, given that still a large portion of their funding, their revenue comes from search, it will hurt them, and it will cause a collapse in their collapse in the share prices. Some of these players, but they could take out a lot of people and put a lot of stress on the industry if they did that. Now, I think OpenAI is really where you want to look at. Companies leveraged that have underperformed those who have been buying TPUs off of Google, and so there's bifurcation in that space as well. But the funding markets will tell you a lot. I think you've got to be looking at Oracle, you've got to be looking at OpenAI, you've got to be looking at SoftBank. I think that's going to cause a lot of ripples next year. Yeah. And the markets for you, what's the key ones for you? Quickly, wrap up.
Really quick, I'm obviously going to be looking at precious metals. I'm going to keep my eyes on crypto. And this dollar looks dangerous, but just when things get really the darkest for the dollar, sometimes it's the dawn. So, I've been bearish the dollar pretty much all year. Going into 2026, a bear, but I'm not opposed to switching sides.
And I will say
either.
this to wrap it up. It's remarkable how quiet Donald Trump has been on the currency. He was, during the campaign, he was talking about getting the dollar down and this, that, and the other. He's made a lot of opinions about where the dollar was, and now it's gone down 10% this year. He hasn't said a word. I think that's quite an interesting situation. I think he loves what he's seeing. Anyway, I'm going to wrap up. Blake, thank you for all your comments, and I've thoroughly enjoyed my interactions with you in 2025. I look forward to it. We're going to take an extended break through the Christmas and New Year period. We wish you all the best through this festive period. Be safe, have a great time, and we'll love you and see you next year in 2026.